Hello everyone, I'm Chester. Welcome to our second webinar series, LimKopi with Millennials.
Yay!
Yay!
Woo!
Okay, basically, right, this will be the epic battle of the sexes between boys versus girls in wealth management. We will let you guys decide if there is any discrepancy between both sexes in terms of the wealth management side. Without further ado, let us introduce ourselves. Starting from me, I'm Chester. I'm 28 this year. If you ever look into the previous video, right, I was actually an investor, right, a very conservative investor when I started investing. I don't know much. Right now, I do know more as I keep reading up and all. My risk appetite grew. Right now, I can say out of the risk appetite, five, I'm around 4.5. My primary portfolio in stocks, um, Tesla. I do have a bit of Robo-advisory, which is our smart portfolio account, about 10%, and mostly in cryptocurrencies and NFTs. And Vince, let me pass it to you.
Thank you, Chester. Hi, everyone. My name is Vince. I'm a relationship manager with Phillip Capital, with the company for around 5 years to date. And on a risk profile basis, out of five, I'll give myself a four. Okay, I always thought I was a five, fully aggressive, until I met someone like Chester on my right. Yeah, dabbling in cryptocurrencies and NFTs. Yeah. So he's the chiong one, the all the way one. Yeah. So I'm more balanced. I invest in unit trusts, ETFs, which are more diversified, and it's like a basket of stocks and bonds. And also have around half of my portfolio in stocks, yeah, in the US and Hong Kong market, yeah, for capital growth, for long-term appreciation. Yeah, so that's my portfolio for everyone. Okay, so with this, I pass on to CK. Over to you, CK.
Hi, hello, I'm CK. So I'm 26 this year. So for my investing journey, right, I recently just started not long ago, I think around like 1 year ago, before the around when I started around before the COVID started lah. So that was the best time to invest for me. And my portfolio, right, mostly consists of more towards the conservative side. I'm more not really risk taker. So like my portfolio invests in those unit trusts, ETFs, mostly in unit trusts and ETFs. It's just that, and then a bit of hype stocks such as Tesla, Apple, and at the same time a bit of cryptocurrency as well lah. So yeah, this is for me. So maybe let's introduce our new faces. Yanni, you want to go ahead?
Yeah. Hi everyone, I'm Yanni and I'm 24 this year. I've been investing for about 1 to 2 years, so it's pretty new. My investment portfolio is mainly made up of stocks in Singapore and US market. I also have a bit of exposure to the emerging market using unit trust. So I would say my risk profile is mainly about maybe 2 to 3 out of 5. Yeah. How about you, Natalie?
Hi everyone. I'm Natalie, 26 this year. I've been investing for around 2 years now. And my portfolio mainly consists of stocks in the US market and also robo-advisory. Personally, my risk profile has increased over the years, and I would rate it as a three for now because I feel that once you start dabbling in asset classes like equities, it's less likely to go back to conservative investments like endowments, fixed deposits, or bonds. Yeah, so lastly, I'll pass it to Claire.
Okay, thanks, Natalie. So, hello everyone, Claire here. I'm 29 this year and I've just started investing not long ago too. Okay, so for my current investment portfolio, it consists of a little bit of stocks from both the US and China market. And right now, right, most of my allocation is actually in unit trust. So I have unit trust funds like technology, healthcare, and just 2 weeks ago, I bought my very first ESG fund. Okay, so as for my risk profile, actually a few years back, like 4 years ago, I believe that I was a low risk investor. So anyone who asks me what's my risk profile is definitely low. Because I used to think that investing is a guy's thing and we girls we just do our endowment plans can already. Okay, but over the years, as I get to know about the investing world, about my finances and my time horizon, right now I can say that I am a medium risk investor. Okay, so along the way, our risk profile will definitely change. So right now I'm medium, which is around 3 out of 5. Okay, because I have a longer investment time horizon right now, and I'm able to take some short-term losses in my portfolio. Okay, so all of us have already done introducing ourselves. Okay, and as you know, all of us here, we are doing some kind of investing. So right now, we would like to know what about you guys who are attending our webinar today? Okay, have you already started your investment journey? Okay, and because today, like what Chester said earlier on, the topic is on girls versus guys investing. So we would like to separate our poll. Okay, we would want the guys to answer first, whether have you already started your investment journey? Okay, so for the guys to answer first, I think the poll should be up soon. Okay, let me check. Okay, is the poll up ready? Okay, yeah. So you guys should be able to see the poll now. Okay, so for the guys to answer only, have you already started your investment? And if you have already started, what do you invest in? Like, do you invest in stocks, ETF, unit trust, robo-advisory, bonds, options, or there's other options under this question? Okay, and we would also like to know, let's say, if you are willing to share with us, why do you start investing, or why have you yet to start investing? Okay, so you can also chat with us in the chat box below. Okay. Okay, so for this, only the guys answer. If you are a guy, answer the poll please, whether have you invested or have you not. Okay, the girls, you will have your time later. Okay, so the poll is already up. Okay, I think my friends here, you're not able to see the poll, right? So I will share with you the poll results. So 95% of the guys have already started investing. Okay, 95%. 5% not yet. For those who have yet to invest, maybe you can also share with us in the chat box why you have yet to share, have yet to do any investing. And okay, 95% of them are investing in stocks and ETF. 95%. Okay, and then there's like 33% in unit trust, 20% in robo advisory. So okay, there's a 35% in cryptocurrency as well. Yeah, so actually quite good. A lot of guys here who are attending our webinar is really investing and mainly in stocks, ETF, cryptocurrency. So guys, are you all also investing a lot in cryptocurrency, in stocks? Chester, Vin, CK.
I personally started investing in crypto, I think, way back because I think it is very risky. So before I invest in cryptos and all right, I always let myself, I always prepare myself that, in the crypto world, right, I will lose a lot of money because it is very volatile. So I keep most of my money, most of my assets in the stocks and shares, and as mentioned, a portion of it in my robo-advisory account in Phillip, which is our Phillip Smart Portfolio. So all in all, right, if things were to go south, right, I know that at the back of my mind, right, there is a portion of my portfolio, right, that won't go wrong because I actually been with this Philip Smart Portfolio, the Robo Advisory account for almost 2 years, invested approximately about 10,000 plus dollars lah, and I gain approximately about 5% per annum each year. I think which is not that bad lah, better than the fixed deposit out there lah. So at the back of my mind, this is my safe haven. This will be like, in terms of I will be getting married next time, or for my kids and all. I still can use that portion. Yeah, so this is how I actually manage my portfolio in terms of having, great diversification, although it's not that great right now because I only have, one stock, one robo, and crypto. Yeah, I'm still working on it because everyone will still be learning about investing. It is not like a one time journey also for myself. Yeah.
Okay, thank you, Chester. All right, so maybe we'll stop here first. Okay, I would like the girls to answer right now. So all of the ladies listening to our webinar today, okay, the poll is already up. Okay, have you already started investing? Yes or no? Okay, and those who have invested, what do you invest in? Okay, so we have the poll up here. How many percent do you think will have invested? For my friends here, like Natalie and me.
I think now actually a lot of girls are investing also. Yeah.
Correct. Yes. So okay. So I would just like to share with you guys again. All of us here except me were able to see the poll. Okay, but Natalie is correct. So the poll results has already been shared in Zoom. Okay. Good news is also 95% of the girls attending this webinar is doing some sort of investing. Okay, but what do you invest in, right? It's slightly different from the guys. Okay, so 80% of the females invest in stocks and ETF. Earlier on for guys, it is 95%. So for female, 80%. Unit trust, my favorite fund, okay, is 45%. Okay. Okay, so then we have we have stocks, right? Then unit trust, robo-advisory 40%. Okay, bonds 25%. And there's actually others, 30% invest in others. So when you say others, I believe is it IRP or endowment plan?
Or
Not
maybe they invest in like art. So some people I know, like, they invest in art. They think that it's valuable, something they can sell. You never know.
Maybe property lah. I mean,
Yeah, yeah,
who
lor,
knows?
maybe.
How about wine?
Chanel bags.
Yeah, why exactly? Why,
Yeah,
right?
wine, alternative investments. And also for ladies, there is also another asset class, which is handbags, like Chanel handbags, Hermes. They actually retain their value very well. Yeah, some even make money, you know.
I
Yeah.
think it's a good investment for those luxury bags.
Yeah,
Maybe we
yeah,
should start.
yeah.
We guys should start maybe.
Yeah. Shall we start a business?
guys also have, right? Guys invest in Rolex also, right?
Yes, watches, watches.
Yeah, so actually in the chat, right, Evelyn, we have this one of the ladies who are attending the webinar. She said that frankly, no drastic difference in gender investment. Maybe male more daring than female generally, because female generally tends to be more cautious. Which I support her what she say. Yeah. So what about Natalie and you? Do you think that when we invest, we are more cautious, like we really study the market, do our due diligence before we start our investment journey?
In general, I think girls are indeed more risk averse than guys because I hear more emphasis on capital preservation while investing from my female customers, which is pretty aligned with most of the studies and even stereotype lah. But I guess it also depends on your age, financial knowledge, social circle, and financial status. But like I have some female friends whose portfolio is hugely penny stocks read off from Reddit, another
Wow.
who dabble in options trading. So these
Wow.
are some
Yeah.
exceptions lah.
Wow,
Yeah.
very risky.
Wow.
Wow, so your friend just read Reddit and just follow along everyone. Wow,
Yeah. Yeah,
that is
people like
really
that.
risky though.
Actually, to be honest, I mean, millennials like us, I think most of us like go for the hype. I mean,
It's
for
true.
myself, I don't speak for the rest here, but for myself, I think what makes me churn out the most money, right? I'm willing to go try, regardless of what risk I actually can handle, right? I mean, there is certain amount of risk that I can actually handle, certain amount that I could actually lose. So I'm prepared to lose all this, lor. So if I prepare already, right, then maybe I could get even higher potential return. Then I think it is all worth it, lah. So to me, I'm still learning, lah. So this is one of the my people's mindset lah. I don't know whether you guys out there like agree with me or not, because to me certain stocks and shares are relatively uh I mean it is not really like we do not have proper research on doing so, like
Right.
NFTs and all, even
True.
crypto right now there's like 50-50 chance of, I don't know, going
Yeah,
where. Yeah, so
50% chance to what as well, right?
yeah, so we are still learning, but then this is my take, my only take lah. I don't speak for the rest. Yeah.
Yeah, actually, I'm very different from Chester. So, because I did a bit of investment in stocks in both US and China market. Then recently, the market quite like a roller coaster, right? So there was this 1 week whereby I keep looking at my Poyers account because the market is always red. Then I cannot really sleep because I keep thinking, will I lose more money? What should I do? Should I be selling my stocks? Like emotional investing, because I don't have an advisor to help me. So that's why in the end, I start to buy more unit trusts the past 1 month to balance my portfolio. So just in case like my stocks go down, at least I got my unit trust to help me balance out. Yeah, so but I don't know if it's just me or generally girls, we are more careful or we worry more. Yeah.
Yeah,
What
actually,
about you? Yes.
that point, I think is also very important that we know how much we are willing to lose before investing. So, like defining your risk level or your risk appetite and setting boundaries. I think this will also help us to not let our emotions come into play when we make decisions. Like, for example, Claire, if she sees her stocks like going down or what, right? Then if her emotions come into play, she might want to sell it really quickly or and whatnot. So I guess in terms of making decisions, it's also very important that when we invest the amount that we're able to tolerate the loss. Yeah.
But one question though, do you all like because I'm not sure if you all do this but when you all see the market is go into a bit of red, right? Will you all panic sell?
No, diamond hands all the
Yeah,
way.
diamond
By the hip.
diamond hits, right? So
Diamond
HODL.
hand.
yeah,
In fact,
yeah,
sometimes I was thinking whether should I buy more.
yeah, right, exactly.
Right.
So I think you got a long-term plan, right? You need to stick with it, and then you got to trust your plan, right? It's gonna work out, lah. So I think it's gonna be good. Instead of panic sell, if panic sell already, then you have some losses on hand, you cannot recover from them. Yeah.
Yes, correct. So, like, okay, maybe just something to share with you guys also, right? Good news for all those females out there who are listening to the webinar. Okay, so the past 1 week I've been doing a bit of research on guys versus girls investing. Okay, and not I say one, but studies actually say that women are actually better investors than men. Yes, Vince, correct.
Are they? Are they
Okay,
really investors?
so
Better investors?
so
What do you
in
mean by good
Better
investors
investors?
or better investors?
I
okay,
think good at
yeah,
preventing capital loss now,
I
definitely.
already
Yeah.
prepared some notes to share with you guys. So in fact, in 2017, right, Fidelity reported that women's portfolio performed better than men by 40 basis points. Okay, means 0.4% annually. Okay,
Wow, wow,
yes.
Not
wow.
bad,
Okay,
not
but
bad.
Wow.
yes,
Okay.
and so there's a reason behind it lah. Okay, number one is because we hardly engage in short-term trades as compared to men. Okay, so like Chester, our good friend here, I know he's quite active in trading, right? But as for us women, I think we also do quite a bit of regular savings plan, whereby we every month we will put in some money into maybe unit trust or some of the stocks and stuff like that. So we don't really do a lot of transaction in between. Okay, therefore when we don't trade so much, our cost is also lower. So the returns generally as compared to men is higher. So this, do you agree with this? Like how do you recommend your female investors? What do you recommend them to do?
Okay, I always remember what a female client told me. She's a old elderly, around a lady in her 40s. Yeah, she say, women, we want safe one. We want to preserve capital. So you must see like a plant. We pour water and raise it every day, slowly, and it will grow into a big tree one day. Yeah. So usually for ladies, I recommend a balanced portfolio, balanced funds, with mix of equity and bonds. Yeah. But again, it doesn't just take into account your gender. We also hear about the investment horizon, the capital they have. Yeah. So it's actually about a mix of multiple factors, like what Natalie has mentioned above.
Correct. Yes, actually in the group chat in Zoom, a lot of ladies out there actually agree that we are better investors.
Really?
How about the guys?
For guys, how about guys?
Yeah.
To me, I
Okay, I
mean,
want to. Yeah.
if I believe in a stocks, for example, I think I do great research on that also. And
By
correction,
research,
that I didn't actually
Yeah.
buy and sell currently right now
Yeah.
because I already construct my portfolio and I know what I want. So for example, stocks, I only do buy a few and I'll keep buying even when the market is low. And for my robo-advisory, every quarter I will put in a sum of money. So this is what I have been doing. So maybe we don't lose that much. I don't know right now if we compare our
yeah,
portfolio.
Yeah.
you're more
Hmm,
hands-in lah to many,
yeah.
many products because you never know, right? Maybe one product will like, what a deal very, very big. Like for example, cryptocurrency or very volatile stocks. You never know. So that's why I think all the guys here mostly in the audience as well, mostly we are trying our hands, right? To see which one
Yeah.
we can make the most returns out of it, right? That's the main
Yeah.
goal. Yeah. Throughout our
We are
life.
about market timing. The right timing, we buy
Yeah.
and get a big return. Yeah.
Yes.
Yeah. So I want to share about one particular trade. My guy friend told me. He said, "Hey, C dip to 214. C owns Shopee, Garena, right? A good business model, in our opinion. Then I bought in at 214, and currently the stock price is 366. Yeah. So I made quite about 60, 70%. Yeah. So the right timing is you got it. We'll make huge returns. Yeah.
But then it is difficult for us to actually keep track on which time to buy in any stock and share. So whenever I found that there's a dip, I will actually put in because I always think that timing in the market beats timing the market. This is this is this is everywhere. I believe everyone is doing so, but how many of us are actually doing it, regardless of whether it is rain or shine? Just invest. You just set a momentum to do the investment. I don't think everybody have that conviction to do it. Also, people will tend to scared lah. Like what we say lor, emotional investing. I think last time I couldn't actually sleep also. Same like Claire. Money my hard-earned money Yeah lor. So I couldn't actually sleep. So as time goes by, I found out that I could take the risk lah. So I've been sleeping peacefully lah recently.
That is good.
But that's also because you invest some into the robo-advisory, right?
Sorry?
Like that and you also invest some in robo-advisory, right?
Yeah, I do have it. That's why I think I can sleep very well at night lah. Eating very well also.
Yes.
How
Okay.
about CK?
Yeah, for me, okay, maybe a bit of context, right? What is robo-advisory? In case if you are new here, we talked about this in episode 1 as well. So robo-advisory, we're talking about smart portfolio. Smart portfolio, right, is a robo-advisor where you put in money. It's not doesn't have to be every month. You just put in a minimum of $300, and will portfolio manager will allocate based on your risk level into investing in different portfolio. So for example, risk one being the lowest risk, risk three being the highest risk, investing in different markets and then generate the returns for you. Yeah. So to continue on, for me, right, risk risk in a manner, right, is I think for guys in general, for me at my age 26. I don't know about Natalie. Natalie and me is 26 years old, by the way. We are the same age, but it's different mindset as well. So for me, right, I will try my best, right, to really get the best returns out of it. Be it in cryptocurrency, stocks, smart portfolio, unit trust, endowment. I believe endowment not really lah. Endowment I think mostly is more towards to beat beat inflation rate, right? Yeah. So
Match,
that's
match,
my take on
match.
that's a take on risk law, really to maybe I set a target actually. I really set a target and just to share as well, I need to because I'm 26 now, I want to reach like 100K like liquid asset by 30. And I think it's doable. I think a lot of people out there, young investors, right, are doing this as well. They're saying that okay, I need to hit 100K, yeah. So that's my goal lah. Yeah.
Okay, Chiang Kai, so since you're talking about risk, right? We
Yeah.
actually also have a poll to ask the audiences out there on what is their risk profile.
Yeah.
Okay, so let me see if the poll is up. Okay, so we would like to ask the audiences, those who are attending, same to earlier on. Okay, guys, answer first. Okay, what is your risk level? So for those who are still not very sure what is risk profile, right? All investment contain a certain element of risk. So a risk profile assessment is to actually there to help you evaluate the ability to take on such risks, whether you can take on investing in stocks or cryptocurrency and stuff like that. So it is very important to know your risk profile because it helps you to have better and proper allocation of your assets in your portfolio. Okay, so we would like you to rate yourself between 1 to 5. 1 meaning the lowest risk to 5 means your risk is very, very high. Okay, what is your risk level? Okay, so 1 means like let's say you're a conservative investor whose main aim is to preserve capital. Okay, all the way to 5 means minimizing risk is totally not your primary concern at all. Okay, you're able to take on high risk of capital loss in order to gain potential high returns. Okay, so the poll results is out. So 0% of the guys, none of the guys actually choose number 1, which is really
It's true.
okay.
I mean,
Yes.
why?
So let me see. The most votes is number 4, 4 out of 5. So 36% of them voted number 4. Okay, and for the highest is 24%. Okay, so just now, Chester, Vince, Chen Kai, what is your rating for yourself?
Mine is 4.5.
4.5. Vince?
Yeah, I
Mine,
believe.
mine is 4. Yeah.
Mine is 4 lah. 4. I chase a bit of hype as well. A bit of hype
Yep.
stocks and crypto, yeah, you know.
Okay, so I think the guys tend to be around the 4 range. Okay, so maybe before that, I'm very excited to know about the girls' results also to see whether is our risk profile similar to you guys. Okay, so for the girls, the poll results is the poll is up already. So
Drum
for
roll,
girls
drum
to
roll.
answer only, yes, what is your risk profile? Okay, please rate yourself from 1 to 5. Okay,
I'm
let's
betting there is more 2 to 3 lah.
I
Yeah,
think might
maybe
be
2 to 3, yeah.
3.5 to 4. Yeah.
Yeah. Not much
Because nowadays,
5, I would say.
yeah, girls also very, very good at taking risks. Yeah.
As as Claire mentioned, very more conservative side. So wouldn't be much of a 5 lah. I would think so.
I think it's like 3 or 4. What about you, Natalie? What's your risk profile earlier on?
Previously, I rated myself a 3.
3. Yan Yi?
Yeah, I rated 3 also.
Okay, I was also a 3. So let's see if they're all the same. Okay. Okay, so yes, we are all almost the same. 53% of those who are attending today's webinar is 3. They rate themselves 3. Okay, there is 5%, which 5% rate 1. And none of us girls are 5. Which is
Wow.
okay.
You
It's
see,
very common.
I
Wow.
told you.
Betul.
I called it.
Yes, correct. So
3. Yeah.
I think it's normal lah. It's normal,
Yeah, yeah.
right?
let me see what else. Okay, let me look at the chat. All right, somebody asked, does high risk mean taking unnecessary risk? So I think it's a guy who asked that. Does high risk actually means taking unnecessary risk? Open to the floor.
Just calculated
Vince.
risk, right? Yeah, Vince is the best person to
Yeah,
answer
Vince
this.
is the best person already because
Yes.
our relationship manager.
Yes.
I think so far the golden rule for investing is high returns always come with high risk lah. Yeah. But when we are going for this kind of instrument, we are also taking calculated risk lah. Because we, assuming you've done our due diligence lah into the certain stock or sector, we want to make sure that we can stomach the risk before we make the investment. Yeah, that's very important. Yeah. How about Chester and CK? What's your take on this?
I mean, to me, to add on, like high risk in terms of it doesn't mean unnecessary risk. I mean, there is always uncertainties. But then, even though, like for example, right, if we are talking about this tech stock, for example, tech are meant to to really balloon up very fast. But then it is also counted as very high risk. But then if let's just say you do your due diligence in terms of having you have the conviction, you see a future with it. I think all your risks are calculated, even though it is a high risk one. So it still boils down to how is your risk appetite is lah. Basically, some people think that tech stock is not that high risk. Some people do. So to each his own. For example, I think the higher risk one, I think for me, right, that I could actually see myself losing it all, will be in the world of crypto, because I don't do much homework as compared to me when I'm dabbling in the stocks and shares.
Yeah, same, same.
And I do not have to worry about my Robo-advisory lah portfolio account, because it's managed by the fund managers on our end, the smart portfolio team. So I leave my profile in good hands lah. So
Yeah,
yeah.
into the portfolio managers to manage for you.
Yes, so actually talking about smart portfolio, if someone were to sign up for smart portfolio, there's also different portfolios for different risks, right? Because okay, yesterday for those who don't know, right, for the audiences out there, Phillip Capital actually has TikTok. Okay, so when yesterday while looking through our Phillip Capital TikTok, they actually show on the smart portfolio portion like how to actually sign up for smart portfolio, and I saw there's this portion whereby they can answer some questions to determine what is their risk level. Then from there they actually help to, is it they help you to give you the correct portfolio based on your risk?
Yeah, basically I think, well, I went through, and it basically, right, the 7 question will actually curate a portfolio of your risk level. So if you are the lower risk one, then you'll be suited in the lower risk profile, which is the lower one, I think is the
Income,
income. Then after that, income and
income
growth,
and growth, and
growth.
growth.
Yeah. So there's 3 portfolio for the choosing lah, when you do up the questions.
So for those of you out there who wants to do smart portfolio, you all can actually see our TikTok. All the steps are already there. Okay. Yes.
Yeah.
So apart from that, right? Okay, because just now earlier on, Chester, you talked about tech stocks, means it is high risk or something like this. But actually, I feel that even though, let's say for example, I'm medium risk, right? I also invest in tech stocks. But because I actually allocate my stocks and my funds um, in based on my risk, so I actually have more unit trust than my high risk tech stocks. So therefore, my risk is like balanced. Okay, but I feel that it's not easy for someone to actually study and learn how to balance their portfolio. So for those of you out there who, let's say the 5% who have yet to start investing, but after listening to our webinar, you decided, I also want to start. You also can look for advisors to help you to um, like see what's your risk profile, how to actually choose the funds and stocks. So Vince is always helping clients to do all these advice, right? Yes. So in fact, actually at the start when I prepare my funds and my stocks, I actually look for one of the advisor in Phillip Capital to help me look through if everything is okay before I actually invest. So Vince, do you have any interesting stories to share about regarding all these different risks?
I think, okay, I just want to share a bit more about the tech funds. Okay. I think since the COVID disruption is moving into a digital age, and it really has taken the limelight in the market. Yeah. But what we have to tell clients also is to be prepared for the volatility, which means the maximum drawdown could be like 20, 30%, because they're very much affected by a lot of factors, including interest rates. So, for example, if you invested $10,000 into a tech stock fund, you must be prepared to stomach the loss when it goes to 7,000, or even 6,000. So that's the kind of dip that you might experience. And trust me, when you see the actual dip, you'll feel emotionally. Yeah, you'll feel that what happened? Why did my portfolio become like that? Yeah. So that's where conviction comes in, to really test you whether you have belief in your underlying investment. Yeah. So my belief in tech is it will continue to uh, shape the future, the digital economy. So in fact, when the tech sells down, I will buy the dip. Yeah, this is for my opinion. Yeah. So for clients looking for capital growth, I'll always include the tech stocks, tech funds inside. Yeah, but for more conservative or balanced investor, I usually recommend a balanced fund or like a income fund that pays out 4 to 5% per annum. Yeah, that's actually very manageable. Yeah.
Yeah, so for those who need more help on how to allocate your funds and your stocks, you can always look for Vince or Yanni, or we also have other advisors in Phillip. Yes,
Yes.
correct. Okay, someone asked, can you explain again about the robo-advisory investing?
Okay, I think okay. So if you are talking about what I have been actually telling you guys right about my Philip Smart Portfolio account that I have with Phillip Securities. Basically, it is a robo advisory account. So it is a discretionary services provided by our managed account team. Okay, what they do is basically you go online, you click on the Philip Smart Portfolio, you can actually do up the account. Okay, through the 7 questions, right, they will curate. We have an algorithm to curate the portfolio for you. So for example, if you are a high risk taker, then you will be having the higher risk one, which is the growth
Growth.
portfolio. Yeah, then after that the medium one will be the income and growth, and the lowest risk one will be income portfolio. So it is on a segregation for 3 risk profile. So once you do it right, you'll be able to fund your account and start watching your money grow. That's the basis of robo advisory, which means that at the back of your mind, right, you do not need to actually like worry about whether this one do well, that one not doing well. Everything is professionally managed by the team and the algorithm lah, basically. So this is one of the diversification tool that I actually use. Yeah.
The most important is Chester. You invest right, you got hot or not so far?
Well, lah, it's not I mentioned approximately about 5% on a year-on-year average.
Yeah,
Yeah.
that's
So
I
it's not
think
that much, but then if
it's
you
a good
if let's
number
just
to
say,
start. Yeah.
yeah, it's a good number to start, and this is more towards like I'm planning for my future and this one maybe like kids funds or if I don't have kids, then this one go holiday already. So yeah, so I think more or less we do have some rainy day fund. I treat that as a rainy day fund. I will be topping up progressively also. So I think each and every one of us will have their rainy day fund, be it in robo advisory, be it in a fixed deposit or even an endowment plan. So for me, I choose the alternative of having a robo advisory account, whereby my potential return might be much higher. Yeah.
Yeah, like same as Chester, I also use the smart portfolio as a diversification because it's really definitely better to keep it in your bank account with 0.05% interest nowadays. And then I don't have to check it regularly like my stocks portfolio. I just top up every now and then if I have spare savings. And then is you are free to withdraw anytime you want, then just let it compound lor. So it's a safe and easy way to slowly grow my wealth lah.
Yes,
Yes.
correct.
Okay. I want to share, right? Because I'm at a phase whereby I'm getting married. So I
Yeah,
want to
congrats.
just share with all the
Woo!
men out there, okay, that because the man must buy a proposal ring, right? And
Did you
depends.
just
Sometimes
say
the girl.
warn?
Sorry.
Did you just say warn the guys out there?
Not one, but just kindly advise. Yeah. So after that, I stepped into this this space. I realized actually, guys, right? It's good to think of ways to make more money. Okay, because you'll need it. Yeah. So like
Certainly agree.
proposal ring, the wedding, photographers.
Spending a lot on weddings, right? I think
Yeah,
recently
like
weddings also, wow.
yeah. Once you're a groom to be, your wallet is just open up. Just yeah.
Yes,
Then also as the guy, right? For myself, I got a bit of a ego lah. Like I want to pay more or like just as the guy traditionally we are the hunter, the gatherers, right? We want to provide lah. So yeah, that's my side lah. Yeah. So guys out there, if you're stepping into this space or going to, encourage you to start investing. Okay, make your money work harder for you, so that in future your life will be easier for you. Yeah.
okay, so actually just now Vince mentioned about guys have to spend more money or earn more money, right? Okay, Yin Yi and Natalie, I have something to share with you girls. Actually, we girls, we also need to grow more money because I think a few days ago, I was reading some podcasts, listening to some podcasts. And as you know, right, us girls, our life expectancy is actually longer than men by 5 years. So I actually went to search if we are living longer, like living longer more than the guys, right? After the age of 67, we need about 2,000 every month. Okay, like let's say we retire, we need 2,000 every month. So if we have 5 years longer than guys, we actually need $100,000 more than the guys. So by right, we should be working harder than the guys to actually grow more money. So recently, I'm also thinking, how should I like grow my money so that at least when let's say if I'm really single all the way and I need 100,000 more than a guy, I need to start investing more soon, right? You mean nobody, y'all wouldn't go and think of like when you retire, you might need more
Yeah,
money.
that's why I need to start planning earlier.
Why the 100K more than guys? Where does it come from?
Okay, I counted because every month we need $2,000, and if we are living 5 years more than a guy, two one. Okay, I need my calculator.
Also depends on how much you spend per month, right?
Yeah.
So
Correct.
it
2-3
depends
million
Only
on
got frugal life one. Yeah,
Yeah.
just bread every
Could be a
day.
baller,
yeah.
retirement years. Yeah.
So unless you like want to have a dog, then you want to have a luxurious
Yeah.
life, go MPS, walk a bit, Yeah, okay lah, yeah.
Yeah, so okay lah, 2,000 times 12 months times 520,000. Must get my money work hard for me already. Yes, okay. Maybe let's go back to the Q&A. Let's see if there's other questions.
Yeah, I saw that there's a few questions on the Robo-advisory account lah. So there's like, do you need a large sum of money for a smart portfolio? Right now, to start a smart portfolio, right, basically it is just only $300. So with $300, you can actually invest in the portfolio, and the and you can start investing in the smart portfolio. Sorry, whereby you can just open the account online. Yeah.
Yeah, they
So
allocate based on your risk profile lah. Yeah, so you don't have to worry on that as well. Just to let you all know.
so to add on the another question, which one person said that a robo advisory perform compared to BUSD, IVB, which is very quite well diversified. What are the fees like?
I think they are
So
talking about ETFs.
yeah,
So other robo-advisory, right? They are underperformed for ETFs, right? So what makes it different, right, is that for smart portfolio, we only charge 0.5% management fee, right? So as compared to other robo-advisory, so what it is, right, I think it's a good platform to start, especially for new investors, young investors like us. Yeah.
yeah. To add on, I think because our managed account team, right, is also managing the smart portfolio. So as and when they balance the portfolio when necessary. So I do not need to actually care about how well or how bad my portfolio is doing, because they will be judging and doing the rebalancing as and when as necessary. So I think the robo advisory account that we have is pretty much safe and in good hands with the portfolio managers.
Yeah, think long term. Really think long term instead of just 1-2 years, and invest. Uh, yeah, invest monthly lah. Yeah.
Okay. Okay, Vince, actually there's a question for you in the chat. So apparently we have a very
Your fan.
loyal attendee.
Yes.
He attended
Wow,
our
thank you.
first
Yeah.
webinar, so he's now on our second webinar. Maybe I read out the question. So during the last session, you responded to a question about China market. Okay, and answered within the context of whatever happens, China is still the second biggest market. So just to refresh, this was the time when Alibaba was still bearish. What is your assessment of China market this time?
Wow. Wow, this is
Wow,
testing
it's
market
really
knowledge.
the $1,000,000 question.
To Yan Yi and Natalie, please help me along with
Yeah.
this question. Yeah.
Actually, it went up last week by a bit. Yeah, it's slowly recovering already.
So for new investors, is it a good time to start? Like for me, since I haven't really started on China market.
You definitely should.
Is
You
it?
actually dabble in China market also.
Yeah.
Yeah. Okay,
Yeah.
but one big concern for China market is the regulatory risk that you have to be aware of, lah. Yeah. Uh, because I think the Chinese government is just getting the house in order so that they are more ready to move to ahead, lah. Yeah. So overall, it should be a positive outcome, societal outcome, lah. Yeah. So I believe once they get everything in order, they are ready to move again. Yeah. So I really think that there's potential in the China markets. Yeah. So I've been allocating away from US market as the valuation got higher and shifting into the China market. This is one of the bigger moves of my portfolio lah. But again, I might be wrong because the there might be more regulatory control which push down the China market. Yeah, that's something that we have to be aware of. Yeah, but I think somewhere along I saw that in the news that they allow Jack Ma to go to the Spain to travel
Yeah,
outside.
apparently,
So it
wow.
might be a signal that okay, why is he allowed to travel overseas? Yeah, but all this is just market news. All this is market noise. Yeah, so always go to the basic, which is you're investing in the company. What's the potential? Yeah, yeah.
Yeah.
So
Stay away
what's
from
my take on the China market? Yeah,
I think probably stay away from speculation lah, But
yeah,
for Chester
yeah.
and myself, I think we are more towards
We are digging for speculation, man.
yes, we
Whatever we
are
can
looking for it. Yeah.
go, we can just go only.
Yeah.
So
We always read news
more
about this hype,
cryptocurrency,
these hype
more
stocks, this hype cryptocurrency,
wow.
Yeah, it's all about hype now.
That's go big or go home.
Yeah, really.
Actually, on the aspect of like going for hype or whatnot, I think there's also different approaches. So for example, like crypto, like for people that don't want to be directly exposed to crypto, right? Like investing in, for example, like a Coinbase or like the stock itself, which is a platform for crypto for people to trade crypto and whatnot, right? It's also exposing yourself to crypto indirectly. And I think in this manner, your risk also is lower because it's not like directly into the currency or to the coin itself. Yeah, so I think actually it's okay to be open to like the hype and the fluctuations. But if let's say your risk appetite is slightly lower, there are alternatives to go about exposing yourself to it. Yeah.
Yeah, actually got one interesting question. Maybe I take one as well. What are your thoughts of energy market now, knowing that there is a global shortage situation? This one, right? Disclaimer, you sort of sidetrack a bit. Those who on iSwitch, right? Remember to switch out. Switch out, because you know that iSwitch is exiting the energy market.
Yes.
And yeah, like for myself, my household, right? I was previously from iSwitch, and now we need to switch to another new one. A bit troublesome lah, but yeah, to save the cost, the government cost lah, lah how. So Vince, maybe Yan Yi or Vince maybe can take on this on energy market. What are your thoughts on energy market, knowing that there's a global shortage situation right now? Or do you all
Actually,
think like? Sorry, go ahead. Yeah.
I think short term, if you are speculative, you are able to take risks. You could possibly put a small position right into like commodities like oil, coal. Yeah, but that's speculative. I must say again. Yeah, I think this arises from the pandemic and also the supply chain shortages. Yeah, so
But
yeah, this is my
I don't think the energy market will be at all time low all the way lah. And in a way, right, we won't function without energy, right? So in the long run, right, I believe it will rise. It's not a permanent thing lah. Yeah, it's not to worry on that.
yeah.
Okay lah, I think let's not make things difficult for both Vince and Yan Yi. Okay, why we kept asking Vince and Yan Yi? Because they are under the Phillip Investor Center. So they usually give advice to clients. So therefore we always ask them for their advices.
Yeah.
Okay, but if you guys need any other advices, right? Actually every week we have webinars in poems for you guys. I think there were some webinars related to energy. In fact, there was also on the China market. So for webinars, you can go to our Poems website to sign up. Okay, every day, almost every day, we have webinars whereby you can go in to listen, to hear more from the professional, the experts, and also the advisors. Yes.
Yeah, touching on energy, also something that's gaining a lot of attraction is renewable energy, green energy, and also this is strongly associated with ESG, environmental social governance, ESG funds. So this is gaining traction in the investment world. Yeah, people are becoming more and more green. They are more likely to support this kind of strategy and funds. So we also have some of these ESG funds hosted on our Boeing's platform and also seminars on it. So if you're interested to hear about ESG, you all can sign up for the seminars as well.
Yes, correct. So speaking about ESG, there will also be a annual conference ESG happening in December. Okay, I think it's on the 11th of December. It's a Saturday morning. So you do look out for our invite. Anyone interested in ESG, you can attend the webinar. So we'll be inviting guest speakers to talk about ESG and also fund houses. Okay, so we are left with another 6 minutes. Let's see,
Yeah.
is there any
Actually, I see
question?
another question
Hmm.
Q&A. Someone asked why go to robo-advisor instead of approaching a professional fund management for investment advice. Basically, definitely for robo-advisors, you can start with a low minimum capital. For ours is only $300 and the management fee is very affordable as well. That's definitely one of the pros of robo-advisors. And then we actually have so basically it's really tailored to your risk profile. And but for portfolio management it actually needs a higher quantum. And also yeah, so basically for robo advisors, I think a lot of teenagers are attempting this method because it's very convenient, it's easy, and we a lot of us like to do things ourselves. Like yeah, so
Yeah,
we
more
just
DIY.
download the app, then
Hmm.
we click, then
Open account. Yeah.
yeah.
Yeah, I think to add on, right, basically robo advisory and the professional fund manager, right, before I actually went in depth to actually decide on which one to have, right, I will go for robo because to me easy as one like ABC. I go online, I click a few clicks, then I can start investing. So if I go through portfolio, professional fund managers and all, right, okay, they will still be doing the same thing, but then I will be paying a bit higher than what I used to. And I always do a comparison between like algorithm plus the fund managers in the robo advisory versus one professional fund manager. It is a group and algorithm versus a singular person. So I weigh lor which is better, which is more worth it. Then I'll take which one. So for me, very clear cut. Robo advisory is one of them, one of the preferred choice that I will pick up. And right now, I think the news also will be like right now there is this like hype in robo advisory, and they were discussing on like does robot and algorithm do better than the normal like the professional fund managers. So these are still in they are racing, they are still racing. So I put my bet in the robo advisory. Yeah.
Yeah, another question is once again the management fee for us is 0.5%. And then someone also asked if millennials factor in ESG when they invest. I think ESG is a really hot topic right now. Yeah, so Claire, what do you think?
Yes, I've already
Yeah. Your
started on
specialty topic.
my correct. So
Claire is a
I've
fan.
already started ESG investing. The reason why is because actually a few years back I did hear about ESG. But if you were to listen to the news, let's say you go to Bloomberg Straits Time, they are starting to talk more and more about ESG recently. It is already one of the trend. And more companies, right, they are also incorporating ESG into their company. Even Phillip Capital, I think a few weeks ago, we went for this tree planting thing, which is ESG related also. So definitely, I feel that ESG is something that us the millennials or even the younger one is Gen what? Gen Z, right?
Why?
Gen
Exactly. Yeah.
Z, yeah.
Yeah, we should start looking at ESG investing also. Yes, correct. So we are left with 2 more minutes to the end of webinar. Maybe should we conclude? Like, so after this whole webinar, right? Like, do you think there's a difference in our risk profile? I think a bit lah. Oh.
I think it's nice to know that there are more conservative one, at the same time more risk averse one. So like Chester and myself, we so it's for audience as well to decide, to comment also.
Yeah, do you agree that girls are better in investing, or guys are just because of we take higher risks, that's why we actually lose more? So who did
I think
better
more. Yeah.
for you guys to decide? So
Actually, we also wouldn't know lah until maybe 10 years down the road, right? Like based on our time horizon. Yes, but definitely women need to invest more because we live 5 years longer than the guys.
No, guys need to invest more because we need to start a family.
yeah
yeah, we are the breadwinner.
Yes. Okay, so I think we are left with 1 more minute to the end of this webinar. So sadly we have come to the end of the webinar already. Thank you everyone for joining our second episode of LimKopi with Millennials. Okay, so every month we'll be coming together to actually share some of the interesting financial topics and what do all of us the millennials think about it. Okay, so we also have Facebook, Phillip Capital, we have Facebook, Instagram, TikTok. So do follow us. As long as like we have interesting topics to share with you guys or webinars, we will always be posting in our social media. Okay, so do keep a lookout for our next webinar invite, and we hope that you had a great night with all of us. So we hope to see you in our next webinar again. All right,
Yep,
thank
we
you
hope to see you
everyone.
again
Yeah.
soon. Bye bye.
Thank you to our guests, our two guests
Bye.
that joined us. Again, Natalie.
Thank
Thank
you.
you.
Enjoy your night.
Bye,
Bye
guys.
bye.
See you on
Bye.
next month.